Hello everyone, a very good morning, good afternoon and good evening to all of you. This is your host Vaibhav. Today we will be getting familiar with a very interesting indicator. The name is R squared. This is a statistical formation which tries to measure the variance of a dependent variable from the independent variable. So if we use this formation, we are likely to get a good idea of how strong the trend is. If we use the dependent variable to if we use current price as a dependent variable and the average price over a chosen calculation period as the independent variable, we can see how far the price has deviated from the average price, and in correlational terms we can get a good idea of the trend, whether it is strong, whether it is continuing in the current direction, or whether it is likely to change and turn around, and whether we should be going for a profit booking if we have the trading position open in the existing trend, or we should be thinking about initiating the new trades. So all these questions can be answered by the help of this indicator. So let us now head to the JForex for the newly released trading platform from the Dukascopy Bank SA. This is the Euro USD chart with the each candle period defined at hourly. For adding this indicator, if you simply do a quick search, you will find it. R squared, no, not this one. All right, here it comes. The output of this indicator is going to vary from 0 on the lower band to the 100 on the upper side. When it is close to 90 or somewhere around that, we consider the trend to be strong, and if we have the output value which is lower, 50 is used as a mechanism to determine the strength of the trend, and below 50 the trend is considered not strong enough. And if the output of the R squared is above 50, it is considered good, and higher the value, better it is for establishing a strong connection between the existing trend and the current price. So depending on how strong the price moves are, momentum is, we will have this output value deviating significantly. And regardless of the direction of the trend, these indicators output simply tries to measure the strength of the trend. So it is not really important for the trend to be up or down. All that matters is the strength of the trend. As you can notice, when the price moves have been strongly going in a one direction, we have had this output close to 80 or above that, and when we have the momentum turning sideways as happened here, the output of the indicator dropped significantly. So we get to know if the momentum is sideways or whether the trend is strong. So accordingly we can make our trading decisions, and that is a very important information, because if the trend is not really strong, if the things are simply going sideways, it is better to trade cautiously and not expect big moves. And only when the trend is strong we can expect the price momentum to pick up and provide us good enough moves which are going to bring us large profit. This fact is explained simply by these multiple observation. So whenever the momentum picks up and we have these strong moves in short span of time, the output of the R squared goes up. But as things stabilize, as the price action stagnates and starts to move in a narrow range, then we have these output dropping below 50 and hovering near the lower values. So this indicator gives the strength of the trend and it is quite reliable in that manner. Now let us look for some examples where the momentum was strongly bearish and we had this out value on the higher side as we are observing here. And once the price action stabilized and it started to go sideways, again we saw these R squared value dipping and falling significantly below 50, and even at some point in time it was fairly close to zero. That happens when things are moving in a very narrow range, when the momentum is not strong in either direction, whether it is up or down, it doesn't really matter. As long as the momentum is strong, we will have these output values of the R squared closer to 100. It can be 80, it can be 90, somewhere in that vicinity. Now if you had gone for the initiation of the trade, as the momentum start to pick up after this value of the R squared having dipped fairly close to zero, you would have been in a good position to profit. As the fresh breakout came in, we saw the output of the R squared again jumping above 50. But once the momentum waned, again we saw the output of the R squared dipping fairly close to zero, and it started to recover only after this trend changed and picked up on the upside. So this is one more instance where we are seeing the output of the R squared picking up when the momentum is strong and then again falling back when the output is close to zero. So this is a very important point to consider while using this indicator. You can use this indicator for any instrument of your choice on this platform. You can use it in forex currencies. You can use it for figuring out the strength of the trend in commodities, indices, individual stocks, cryptocurrencies. So most of these instruments available on the platform are going to be working quite well with this R squared indicator. And this is one such indicator which tells you the dynamics of the price in a three distinct stages. For most indicator, we get either buy or sell signal, but this is an indicator which will also tell you to simply wait and allow the output of the indicator to again rise above 50, because that is the time when the momentum is gaining strength and going for a fresh move. And as things stabilize and the dip starts, we see the decline of the R squared output below 50, and even when it starts to decline from the higher levels close to 100, we should get cautious and think twice about initiating the new trades. Only when the output of the R squared is rising from lower levels, we should be getting interested. And by the lower level, I mean it should have gone fairly close to 0, and from there on it should at least come back to 50 and start to rise above 50, and that is the time to start looking for the trading opportunities, because that is when the momentum is strong and we are likely to see strong moves in the instrument of our choice, as we witnessed here when the output of the R square jumped above 50 at 10 GMT. We had this USD JPY with this significant move, and then it continued its journey higher for next couple of hours. So if you had gone for the trade at these levels, you would have been in a position to profit another 100 pips in next couple of hours. And as things stabilized and the momentum waned, we saw the dip in the R squared value. So this is the time when the indicator is telling you to wait and allow things to stabilize and go for the initiation of the trade when the momentum starts to pick up again, as happened here. So if you had gone in for the trade, then again you would have been in a position to profit around 50 pips, and then we saw the dip in the R squared value, and only now it is picking up with the possibility of USD JPY inching back towards 138 or even beyond that in next couple of hours. So the momentum is picking up now as we are witnessing the rise in USD JPY with these strong moves already in place. So that is the one advantage with working using the R squared indicator, where we get three distinct stages to work with. We can see if the momentum is strongly bullish, strongly bearish, or simply sideways, and plan our trades accordingly. So that offers an advantage of avoiding the choppy markets. You can work with this indicator to avoid choppy scenarios, wait for things to stabilize and go for the initiation of the trade when things are looking promising, when the momentum is strong. So that is advantages. That is a good starting point for this indicator, and we are likely to see higher probability trades being generated if you are able to incorporate these indicators in a manner where you can increase the proficiency, or you can say efficiency of your existing setup, or you can even devise a new setup with the help of these indicators to figure out these highly promising trading opportunities. So give it a try and see how it works out for you. Try out different combinations, go for observations on long time period data, because you will have to make these observations for at least couple of months to gain insight into the working of this indicator, and see how many times it generates the signals which work well, and how many times the signals were generated which turned out false. So you can get a good sense of the efficiency of the indicator and also some of its drawbacks, and then you can plan your trades accordingly. So that's my suggestion, to go for the indicators use after duly studying it, and then trying to incorporate in your trading system with compatibility in mind. So that's all from my side for today's session. If any of you have any query or any idea to share, do write to me in the feedback, and I'll be more than happy to take the discussion forward. Thank you all for joining in. I'll be back tomorrow with a equally interesting indicator to work with. We will see how we can take advantages of these different indicators to figure out the profitable trades, and of course go for our main purpose, that is to make money, that is to make profitable trades. Thank you all for joining in. See you next time around. Till then, goodbye.